Hey guys, my name's Jonathan Reich. I'm a licensed CPA in the state of Louisiana, and I want to welcome everyone to The Digital Merchant. The Digital Merchant is a channel for digital marketing, online businesses, growth strategies, all that stuff without the marketing fluff. Today we're going to be talking about how to sell your business and why you need a tax advisor to do that. You would think it's pretty simple. Hey, I've got a business that's making $100,000 net profit, but it's valued at 3 times EBITDA, so maybe I can get $350,000 for it. That is just a fundamental misunderstanding of how business sales work. There's so much more that can go into it depending on tax strategies, how your financials are prepped, things like that. And having a tax advisor is something that is just, I think, lost on a lot of business owners. The opportunity cost, they don't even know what they're missing. And so as a CPA, I've helped plenty of businesses walk through what goes into a business sell. Because ultimately, at the end of the day, like I run a CPA firm. I hope one day that I can sell the business to someone. It would always be a shame to see a business that's performing well shut down and sell for the value of its assets and the things that it owns. You lose a lot of brand equity, employees lose jobs. At the end of the day, most business owners, they should have the goal of selling a business. But you don't want to get ran through the ringer when it comes to taxes and when you do make that final decision to sell. So why is it important to have a tax advisor for a business acquisition or for a business sell? Let's talk about it. So the first thing that I think most business owners ask is, how much tax am I going to owe when I sell this thing? And the answer, like everything else, is it kind of depends. So a business sale can be structured in a ton of different ways. You may sell a portion of your stake. Right now, I own 50% of my company because I've got a partner. He owns 49, I own 51. I can sell equity. I can sell a portion of my 50% to someone, as long as my partner agrees, of course. Or I could sell the assets that the business owns. Maybe I sell my laptop and my building and my book of business. Those are all considered assets. Or I may sell some assets. Maybe I say, hey, I want to sell the building and have a landlord rent it out. There's so many different ways to do it, and then there's a lot of different ways to be funded. You can receive cash at closing. It can be a seller finance deal. It can be an earnout. It can be a mixing of all 3 of those. Each of those produces a different tax result, and it can all be very confusing. It's even confusing to folks who are in this realm of finance. So the IRS, though, they have cut and dry rules. They're not going to treat all business assets the same. A capital asset, something that you've owned for more than a year, like a building or machinery, depreciable property, real estate, inventory, all of those are going to have different tax burdens associated with the sale of them. So you really have to look at how your business is structured, and that is why I always say it's best to have a tax advisor for a business sale. That can be something like a local CPA. If you're a small business and you've been working with them and they kind of understand the ins and outs of your business, that's fine. But if you're a mid-size or you're a small business that is a little bit more complicated, you're going to want someone who is there throughout the entire life of the deal, thinking about selling. You may want to engage with them 6 months before you actually put the business up for sale. For instance, if you've got financials that need to be cleaned up, if you've got maybe personal expenses commingled in, you're going to want a tax prep advisor who can help do that. And so I offer that here locally for my firms, but if you're not in Shreveport, the world's pretty big out there. You're going to need someone who can handle that for you. And some of the folks that I've heard in the space that have been recommended are like Pillar Advisors out of New York City, for instance. They can basically unwind your books and say, hey, this is what the business expense is. This is what a owner draw is. This is the best way to position yourself when you go to sell. This is how you need to do the breakout. They can really advise on that. And so, and I'm just making up numbers here. Let's say they charge $50,000 for that service, but they save you $200,000 in taxes. That is a phenomenal return on investment, for instance. So let's talk about some of the other reasons that you might want someone who is a tax prep expert whenever you go to sell your business. So, if you're doing an asset sale versus an equity sale, most buyers are going to prefer asset purchases. They want to pick the assets that they're buying, the ones that are useful. They're going to want to avoid liabilities that may be tied to those assets. And then it's beneficial for them to buy an asset as opposed to maybe equity, because there can be a step up in basis. They can depreciate that, all of these technical terms that are going to cost you money if you don't know about them. That's probably one of the main reasons I think you want a tax team involved whenever you are signing a letter of intent, getting ready to sell. They're going to be able to advise you before you get ensnared into those types of situations. So in an asset sale, for instance, maybe the purchase price is allocated across assets sold. You have to report certain classes of assets to the IRS. For instance, inventory may not be reported as an asset. It is an asset, but it's not a capital asset, and so the treatment on that is going to be different. In my opinion, this is where a finance partner really earns their keep, because this is confusing. I mean, if you're watching this and you're saying, oh man, I'm in over my head, you should reach out to a firm. One that's local if you've worked with them, and maybe if you're a little bit bigger or you're across the country, reach out to someone like Pillar, for instance. Capital gains, most folks think of a business sale and think capital gains. Capital gains tax, for those in the US who are familiar with it, typically tax at 0%, 15%, or 20%. Most folks think, hey, I've owned my business for over a year, I should be subject to this advantageous tax rate. But a capital gain is going to exist only whenever you sell that asset over your basis, what you paid for it, and your depreciation. If you sell an asset for more than your basis, you're going to have a capital gain, which is fine if it's at an advantageous tax rate. But most people, when they sell their business, they don't understand what portions of the business and are subject to that capital gains. At some point, if you sell it for a lot over its adjusted basis, you're going to just be taxed at an ordinary income rate, which can be as high as like 37%. Imagine you sell your business for $1 million, only 50,000 of it is subject to taxable gains, and you have to pay up to 37% on a portion of those proceeds. That's going to sting a lot. But if you have a tax plan in place, because you've talked to a company like Pillar or a local CPA firm maybe that you've worked with in the past, you can really help mitigate that. It's all about how that deal is structured. And you're going to want to make sure that you have that laid out from day one, that you're comfortable with basically having someone on board, going through everything, really going through it with a fine-tooth comb and saying, this is the best way to do this. That is what they're there for. That is why you pay someone who is an expert in their field. But basically, if you're not prepared to do that legwork, in my opinion, you're not prepared to sell your business. And what do I mean by all that? So your decision to sell should start 12 months before you actually sell. If you're watching this today and you're thinking about selling tomorrow, you might already be a little behind, because decisions that were made 12 months ago can affect how much you're going to get for your business today. So, for instance, if the books are messy, the buyer has leverage. I work with some clients who just, right now, they need a little hand-holding. And if they were to go and sell, they're going to take a major haircut on what their business is actually worth, because when the buyer asks questions and the buyer does their due diligence, they're going to find that the seller may say, I don't know, I'm unsure, I'm unfamiliar. And that's gonna cause the buyer to have hesitancy, think twice. Am I paying for something that makes sense? Is EBITDA even correct? Is revenue recognition where it needs to be? The buyer may push for an adjustment on how much they're willing to pay for that business. Another thing, if the fixed asset schedule doesn't match the tax return, tax modeling gets harder. It makes it harder for us to help defer those taxes, for you to pay less in taxes. If related party transactions aren't documented, due diligence slows down, because now you have to ask, why did so-and-so send $100,000 to their cousin? Just stuff like that. Like, business owners are people too. They make mistakes, they slip up, they say, yeah, I can help out. But you need to start cleaning up your act 6 to 12 months before you're really ready to sell. And these aren't necessarily accounting issues. They become tax issues later, because the tax answer depends on the financial facts. If your financial facts aren't straight, or if they're misrepresented, it can just really go downhill quickly, and you're losing a ton of equity in your business. I mean, hundreds of thousands of dollars are at risk because you don't have your financials in order, or they're in order, but you can't stand behind them when someone comes in and tries to pick them apart. So start thinking about engaging with an advisor a year prior to when you want to sell, 6 months prior to when you want to sell. Get someone like Pillar Advisors, for instance, on board and say, hey, help me manage this for 6 months, because on December 31st, I want to check. I want to be done. I want to turn loose of the reins. Here's the keys, building's locked, hit the lights on the way out. That's when you need to start thinking about selling your business. So overall, guys, it might seem like it comes with a steep price tag. If you have an expert in law, or if you're working with an expert doctor to help treat something, it's the same thing with finance. If you're working with a finance expert, there's usually a price tag associated with it. However, the yield, the return on investment for that, if you pay someone like me or someone like Pillar $20,000, and we're able to come in and help clean up the last 6 months or get your due diligence in order, and we save you $100,000 on your tax bill, or we get you an additional $300,000 for the sale of your business that you would not have otherwise gotten, that is money that was well invested. So think about it well before time. If you're watching this video, it's probably already on your mind. Go ahead and make that decision. Make that call and say, hey, I need some help here. I want to make sure that diligence is in order. I need help with payment timing. I need help with structuring the deal. I need help with figuring out what the assets are worth. I need help on getting clean financials that support my position. Just stuff like that. Start now before you're at the signing table and you start getting a major haircut on what your business is worth, right? Because ultimately, it's all about control. You want to control how much you get for it. You want to control how the business is structured on the deal so that you can have the best tax advantage, stuff like that. You just need to be in control because this is potentially your life's work. You don't want to just give it away. So overall, guys, go ahead, make the call, start doing your homework, reach out to folks in the field. My name's Jonathan Reich. I'm your digital merchant. I hope that watching this video helped you get more efficient with your business. Subscribe, and I hope to see you guys on the next one. See ya.